Hi guys, it's Stock Curry, and man, what a crazy couple of days we have had in the stock market. I mean, the last 4 or 5 days have just been amazing for high growth stocks. I told you guys last week that if we saw a continued run up in our high growth stocks going into Thursday, Friday, that we would probably be looking at the beginning of a huge run up on our high growth stocks and a rebound from all of these lows that we've been seeing over the past, well, really couple of months. Now, the great news is we have seen that. In fact, it continued again today. So we're finally seeing pretty much almost all of our high growth stocks have had golden crosses on the MACD, which is bullish. The RSIs are rising. I mean, it's just been incredible. So everything looks amazing for all of the high growth stocks. Pretty much everything YouTubers mention is rising and rising very rapidly. In some cases, things are rising a little bit too fast, and we're going to talk about a few of those today. In addition, we have a lot of the things that we saw back in January starting to happen again. Things like Wall Street bets getting together and causing more short squeezes. We have a lot of shorts that are trying to double down and the stock just keeps going up, which, well, as we saw with GME a few months ago, does not end well for short sellers. We are seeing some natural short squeezes occurring on some of our stocks. And so everything's great. I'm sure you guys are very happy that a lot of the stocks that you bought and held from those highs are no longer down 50%. I know a lot of YouTubers today were going out and basically celebrating the victories and celebrating the fact that we are finally starting to make some money again. And hey, I'm celebrating too. We all should be. It's great. I'm so happy that we held. Now, I understand that some of you guys on this channel did not hold. Some of you guys, your stocks went down, you panicked, you sold, you got out. I don't know, maybe you're no longer watching this channel because you just felt like YouTubers just caused you to lose money and that was it and you're gone. But if you're still sticking around and you did sell and you are missing out on these huge gains that we've had over these past 4 or 5 days, then, well, you already know that you kind of messed up. You sold at the bottom when you should have been buying. And so I just want to encourage you guys that if that's you, I would highly recommend that you enroll in ZipTraderU. ZipTraderU, I've got a link for it down in the description below. I also have a discount for 15% off in the description below. If you just follow the instructions, use my code, and then put in the special discount code that I negotiated with ZipTrader for you guys. What that's going to do is it's going to teach you when to buy and sell stocks so that you're not selling your stocks at the bottom. You're actually buying at the bottom, and you're not buying at the top. You're actually selling at the top. It'll basically flip your mindset around and help you become profitable trading in the stock market. By the way, I talk a lot on this channel about things like EMAs and RSI and MACD and all these other sort of things. And if you have no clue what those are, if you don't know how to read the charts, do technical analysis, that's another thing where ZipTraderU could really help you out. If you did make a lot of money over this past 4 or 5 days, consider taking some of those profits and enrolling in ZipTraderU so that you can learn how to become even more profitable in the stock market and how to do technical analysis and these sorts of things. All right, the other thing I want to talk about is some of the larger shift that we're starting to see in the market. So obviously money is flowing into high growth stocks. Those have all been rising. But of course, money just does not appear out of thin air, right? It has to come from somewhere. And what we saw back in, let's say, February and March, and really the beginning of April, is money was flowing out of high growth stocks and it was going into value stocks and a lot of these what we call pandemic reopening stocks. Now, the problem is the value stocks are no longer value stocks, right? A value stock is historically defined as a stock with a PE of less than 15. That is a good, stable company that we know is going to grow. It's not going anywhere. And there's almost no stocks like that left. The only one I found was GM, and I'm going to give an update on that one today. And so we don't really have value stocks anymore because they've all run up. Back in January, February, I was finding dividend yields up 13-14% on some of these stocks because everybody's dumping money in high growth stocks. Those are all gone. Those same stocks that had dividend yields of 13%, they're now at like 3-4%. I mean, it just shows you how massively the dividend stocks and value stocks and pandemic recovery stocks have all run up. So what does that mean for those stocks now that money is starting to move back into high growth stocks? Well, what that means is those stocks, those pandemic reopening stocks that are actually higher than they were before the whole shutdown started last year. Like, come on, that makes no sense, right? The whole point of a pandemic reopening play is that the price is supposed to run up because things are reopening and we're getting back to normal and we might one day get back up to all-time highs. But no, in fact, they're actually above where they were before all the shutdown started. So those are way overbought. And so what's going to end up happening is money's going to pull out of those. It's going to pull out of the quote-unquote value stocks that are no longer value stocks. It's going to pull out of these dividend stocks where the dividend yields have dropped down to like 1 or 2%. And what's going to happen? It's all going to get pushed into high growth stocks because large institutions, very savvy investors, they want to keep making money. They made their money while high growth stocks were going through a huge crash. They just dumped them into all the other, value stocks, Disney and all this other stuff. Now they're going to pull their money out of that and put them back into high growth stocks. Ebbs and flows, right? Everything's ebbs and flows in the market. So all of that said, I think it's going to be a great time for high growth stocks. I don't know how long it's going to last, a few months or so. I do think we will get another correction of some sort before the end of the year. I don't know what that's going to look like, but I wouldn't be surprised if we got another correction of some sort, say around October or so. We'll see. Maybe it'll be caused by everything reopens and then, I don't know, some new wave of pandemic comes in and everything has to get re-shut down. I don't know what will actually trigger it, but I do see another correction coming up. But for now, for the summer, let's go out and make some money. All right, let's get into today's stock picks because we have a lot to talk about, a lot of stocks to cover. For those of you who are new to this channel, my name is Stock Curry. I used to work as an analyst for some large investment banks, and now I analyze stock picks from the top 10 YouTubers. I give you both the cliff notes from the top 10 YouTubers as well as my analysis on their stock picks. If any stock I talk about today piques your interest, make sure you listen to who I say talked about that stock and then go watch their video to get the full details on what they said. Now, all I ask in return for putting all of this together for you guys is that you hit that like button, subscribe, and then click the bell icon and click all so that you can get notified when I release my next video. In fact, I'll give you 5 seconds to do that right now. All right, before we get into today's stock picks, I just want to remind everyone that I am not a financial advisor and none of the YouTubers I follow are financial advisors either. Today's video is strictly for entertainment purposes only. For those of you who are wondering, you are currently looking at the Webull desktop app. Webull is the app that I use for my trading and it is also the app that I use in all of my videos. All right, let's get into today's stock picks. First up is Bitcoin. StockMo said he hoped BTC would bottom out at around $48,000 and it appears that it did. He said there was a buying opportunity there, and he said he might add on a little bit more BTC to his portfolio. Next up is Dogecoin. Keenan Grace recommends buying DOGE while it's calm and there's very little news surrounding it. Larry Jones bought more DOGE in anticipation of another Elon Musk-triggered catalyst. StockMo previously bought DOGE at around 33 cents. He said the DOGE run-up reminded him of the GME retail investor run-up. StockMo did say he thinks DOGE is not done and could run up some more. He warned that if DOGE drops below 20 cents, it could drop further. Personally, I do see a bottom on DOGE of 13 cents. I did buy a little bit more DOGE today at around 26 cents because DOGE is consolidating and it might break out to the upside. But if DOGE goes to the downside, I plan to buy more starting at around 17 cents and then loading up at 13 cents. In other words, my buy-in price is 17 cents and my ideal buy-in price is 13 cents. Next up is Ethereum. StockMo gave a 5-year price prediction of $9,000. That would represent a 260% price increase from $2,500, or a 52% annual return on investment. Personally, I haven't bought any ETH yet. I'm really hoping to buy this under $2,000. But StockMo said he continues to add on and plans to buy more ETH this week at some point. StockMo said ETH makes up about 75% of his cryptocurrency portfolio. Next up is AAPL. This is Apple. Larry Jones said he is going to wait until after AAPL earnings before he buys any more, just in case it dips. As we often see, even when a company reports good earnings, the stock can still dip. Next up is AMC. This is AMC Movie Theaters. Trace Trade saw what happened with MVIS, and he sees similarities with AMC. Specifically, he sees the stock price starting to rise while the short interest stays strong. AMC rose less than GME or MVIS though, so Trace Trades thinks AMC's time for a massive move to the upside is coming. Next up is BEEM. This is BEEM Global. They're a solar company that makes EV charging stations. Larry Jones likes BEEM because the average analyst's one-year price target is $87.50, which represents a 144% upside from Monday's closing price. Larry Jones said he is buying more BEEM. I will also let you know that I hold BEEM in my high-growth portfolio, and I am slightly overweight on it as it makes up about 7% of my portfolio. Next up is BNGO. This is Bionanogenomics. BNGO was up massively today due to an apparent short squeeze. ZipTrader said that while we might get a few more days of short squeezing, he does expect BNGO to cool off after that. ZipTrader said he does not see the increase in price being sustainable without a larger catalyst. Next up is CCIV. This is a SPAC and they're merging with Lucid Motors. Lucid Motors is an American EV company and a competitor to Tesla. The merger is supposed to happen sometime between April and June of this year. Keen and Grace dollar cost average in on CCIV when it dropped below $20. A lot of people did that actually, and now CCIV is rising fast. It was up 16% today. ZipTrader let us know that the run-up on Monday was due to rumors that Lucid might be working with Apple on Apple's upcoming electric vehicle. And today's run-up might be the start of a sustained increase on CCIV. Remember that CCIV is the most heavily shorted SPAC right now, so CCIV is ripe for a short squeeze. If a short squeeze occurs, we could easily see CCIV jump to $40 or more in a very short period of time. This short squeeze might start tomorrow when shorts are forced to do their mark-to-markets. Now, if you want to jump in now, you can. There's no need to wait for a dip. I only give buy-under and ideal buy-in prices on stocks that we need to wait for a dip on before buying. And since CCIV is already dipped, you don't need to wait before buying in. Next up is CLII. This is a SPAC and they're merging with EVgo. EVgo is the largest network of fast charging stations in the United States. They have partnered with GM for massive expansion over the next 5 years. Now, it's been a long time since we talked about CLII because this is another SPAC that has been absolutely beat down by short sellers. But the chart is bullish again, so there's a chance that this will short squeeze. Keen and Grace said that because EVgo's charging stations are powered 100% by renewable energy through solar panels, they are more likely to get a larger benefit from Biden's infrastructure plan than other charging station companies that rely upon the power grid. Keen and Grace gave a buy-in price of $11 and an ideal buy-in price of $10. He also gave a $14 price target. That is Keen and Grace's play for a short-term swing trade, and I like that. CLII does in fact have a history of swinging between $10 and $14. Here's 10, here's 14, here's 10, here's 14, here's 10, here's 14. When you have a steady chart pattern like this that repeats itself over and over again, this is a great opportunity to swing trade a stock. Swing trading is when you play the natural swings in a stock's cyclical price movements. You buy the low and sell the high, and you repeat that over and over again. When a stock is trading in a set channel like CLII is, you know what the low and high is, so you know exactly when to buy and sell. Swing trading is actually how I make most of my money in the stock market. I haven't been able to do it since October of last year due to the unusually large market volatility that we've seen over the past 9 months. Next up is GM. This is General Motors. They're an American EV manufacturer getting into EVs. We haven't talked much about GM over the past 2 months, so let's do an update. GM ran up to $63.44 before pulling back a little. Technically, it is turning bullish again, and the stock continues to bounce off of the 50-day EMA, which is still rising. This is a long-term value stock as well as a long-term growth stock. And looking at this chart longer term, it has shown consistent growth since March of 2020. I will remind you that they plan to go 100% EV by 2035, and since they already have worldwide infrastructure in place, many analysts expect GM to outsell TSLA in worldwide sales. GM is already the #2 EV manufacturer in the United States, and they have 20 new EVs being released over the next 2 years. Larry Jones likes GM and added GM to his $5 a day challenge. GM remains a great long-term value and growth stock. TipRank shows the average analyst one-year price target is $71.40, which represents a 22% upside from Monday's closing price. We can also see that the PE ratio is 12.5, which is below 15, which makes this a value stock. GM also paid dividends in the past, so there is a chance that they could start paying dividends again in the future. Next up is MVIS. This is Microvision. This company produces LiDAR and heads-up displays for autonomous driving vehicles. I was dead wrong on my prediction on MVIS. Rather than bouncing off of resistance and going back down, MVIS broke through resistance and skyrocketed up over 56% between the pre-market and after hours. If you did the straddle that Chris Sain recommended, you would have made money on this play. I said yesterday that you would need a $7.50 price movement in either direction, and MVIS jumped nearly $11 between the normal market and after hours. To be fair though, Trace Trades did not expect MVIS to run up this much either. Trace Trades and ZipTrader both let us know that the reason MVIS has run up so much is because Wall Street Bets is pumping it, much in the same way that they pumped GME. Now, Keenan Grace mentioned MVIS today because he last recommended buying MVIS when it was trading at $15.50. It dropped all the way down to $10.12 before doing this massive run-up that we've seen over the past 4 trading days. What's crazy is that this is pure Reddit buying, and MVIS has not even started to short squeeze yet. In fact, Trace Trade showed us that short interest on MVIS has actually gone up, much in the same way that it did when GME first started to get pumped by Wall Street Bets back in January. Now, I do believe that we're going to start seeing more and more of these Reddit pumps and short squeezes over the next few weeks. So hold on, because a lot of these plays that you've been holding since February highs are going to short squeeze. Now, regarding MVIS, I would not buy in at this point, and Keenan Grace does not recommend buying in either. The RSI is overbought, and MVIS has a history of running up massively and then selling off again. If you are currently holding shares, I would set a trailing stop loss on this stock so that you can lock in profits when the sell-off starts. Trace Trades also recommends selling some of your call options if you're holding those so that you can lock in profits. It's hard to tell how high MVIS will rise before it tops out. It just depends upon how long it takes for shorts to cover their shares and whether or not shorts decide to buy back in to push the stock price down like they did with GME. So this is a hold right now with a recommendation for a trailing stop loss. Next up is NIO. This is NIO, and they're a Chinese EV manufacturer. Stockmo now says he thinks NIO has the chance to double in the next 12 months to around $80. He bought a January 2023 Leap option on NIO, and he also bought NIO on Monday for his YouTuber picks portfolio. Next up is OCGN. This is OCGN. They're a genomics company with the goal of curing blindness. Dead Inside said the recent fear around India's pandemic variants has caused OCGN to go up. The main reason is because OCGN is developing a pandemic vaccine in India. People are comparing OCGN to MVIS, which ran up over 4,000%. If the same thing happens to OCGN, its price could be over $2,000 a share within a year. What makes OCGN's vaccine special is that it has been found to be effective against the new variants that are coming out. It is also very stable and can be stored in normal refrigerators. It also has been shown to be 100% effective against severe diseases related to the pandemic. And ZipTrader also let us know that they announced today that they now plan to charge twice as much as the main Indian rival, AstraZeneca. Now, technically, OCGN is overbought and due for a pullback. There's no guarantees that we will actually get a pullback though, so if you're interested in investing in OCGN, you might want to buy in at the current price and set a stop loss at 5 to 10% below where your purchase price is at. Ideally, I think $8 would be the best price to buy OCGN at, if you are blessed enough to get it that low. Keenan Grace also recommends waiting for a pullback before buying in. Next up is SKLZ. This is Skills. They're an online gaming company. ZipTrader reiterated his $30 price target on SKLZ today. He did warn to be reasonable and realized that stocks don't normally double in a week, and that it might take a lot longer to get to $30 than it took to get to $21. Finally, we have TSLA, which is Tesla. This is an American EV manufacturer. TSLA reported earnings on Monday after the close. Before we get into their earnings, I want to let you know that Larry Jones said Elon Musk is going to be on Saturday Night Live next month, and Larry Jones thinks that could be a bigger catalyst for TSLA than earnings was. Larry Jones also thinks Elon Musk's Saturday Night Live appearance could be a boost for Dogecoin if it gets mentioned, and that's why Larry Jones bought more Dogecoin today. Now let's talk about Tesla's earnings. TSLA beat earnings, but they didn't beat by a huge amount. TSLA reported good earnings, but they didn't announce anything particularly unexpected or exciting. As a result, TSLA dropped a little bit after hours. That is exactly what the traveling trader thought would happen, so if you did do the Iron Condor options play that the traveling trader was thinking about doing, then your options should be up tomorrow. Alright, I hope you enjoyed this video and get a lot out of it. Comment down below what your favorite stock pick is. And if you want to get some free stocks, sign up for Webull using my link in the description below. When you sign up and deposit just $100, Webull's going to give you 2 free stocks worth up to $1,850. They're also going to give me 1 free stock, so it helps you out and it also helps the channel out. Finally, remember to hit that like button, subscribe, and click the bell icon if you haven't already. I hope you have a lot of success trading, and I will see you tomorrow.